In this video, traders, we're going to look at the narrative fallacy. Stay tuned. Hey guys, a warm welcome to you. So behavioral finance is talking about the kind of things that we've got to watch out for as traders that are secretly in our minds that are perhaps causing us to trade in a less efficient manner. Okay, so narrative fallacy. What is a narrative fallacy? So we all love a good story, right? As human beings, we love to hear stories, and this kind of proven learning as well. When you have like lecturers or teachers telling stories, you learn more. And you know yourself, when you hear a story about something, talking about a story and how it relates to them, and this, you tend to recall it a lot better than if it was just stated to you as facts. So we love stories. So how does this fit in with investing? So the danger is we are drawn to a less desirable outcome purely because the story is better. So what does that mean? So the story, we can kind of group this into loads of things as well. We can look at the way that headlines are wrapped up. There's always a reason for the Dow dropping, the Dow rising. No one says it rose because it just did. It rose because story. Donald Trump said this, that, and the other. Japan's doing this, this, and this. China's doing this, this, and this. People are doing this, this, and this. There's a story behind it. And if you look at it in terms of investing as well, often we have these stocks that are kind of story stocks. It's a great story. Someone got it. He turned it around. He's come from nowhere. He's made it into this life-changing thing. It's all very good. And whilst it may well be a good stock, and that's by the by, the fact is the story, the narrative attracts more people into it just because of the story. And it might not even be that great a stock. It might not even be what you're looking for, which is why when we look at stuff like value investing is complete opposite. The stories are almost always completely awful. Like the story just says, hey, we tried this, it didn't work. We tried this, it didn't work. We've got this amount of debt. We're burning through this amount of capital. We've lost our best talent. We've now had to downsize with this, that, and the other. And the stock just looks like a horrible story, right? But in reality, that might well be a good stock to buy for the greatest turnaround or the greatest return on your investment. You might buy that at 10p, and if it recovers, it goes to £1. Now, I'm not saying that all stocks are like that, but the point is, this is why a lot of people kind of move into momentum stocks and kind of story stocks, if you like, as opposed to stuff that's got a bad story, because we like a good story. And if you think about value investing as well, which is a kind of great analogy here, is that, you know, the best opportunities come when the story is at its worst. So when things are looking their worst, that's when the best opportunity comes. Now, it doesn't always necessarily mean you're going to make money, but if you think about when Warren Buffett was investing, the story specifically around the banks and the crisis, he put a lot of money to work in the banks when it was the worst story possible. These guys had brought down economies. You know, there was kind of hidden risk in this and that and the other. They over leveraged. There's no idea whether they're going to loan to each other. There's no idea what was going on. There was so much unknown. The stories was super negative in the press, super negative in financial press and on a kind of social media. But Warren Buffett forgets about the story and just says, okay, is it worth investing in? Is it worth me purchasing? Yes, it is. Take my money. Let's do a deal. As opposed to a story stock like, you could say Tesla, maybe, good story behind it. Some people don't agree with it, but put to one side for now. Apple, for example, great story. They've got a great product. Both these things, good product, changing the world, this and that and the other. One man who's kind of pioneered the whole thing, driven it forward from almost nothing. It's a good story, right? It's a great story. And this is not, you know, against Apple or Tesla by any stretch of the imagination, but the narrative encourages us to get involved in it. Whereas the narrative for something that's pretty poor, we won't want to get involved in it. So watch out for the story, whether it's behind something on a short-term basis, guys, whether you're watching some media, whether it's behind a stock or a company on a long-term basis. Keep an eye out for that, because we're drawn to the story as opposed to the outcome, if you like. So we've got to be careful that we're looking at things objectively. Yes, the story, of course, helps from an investment perspective. It's got to have a good kind of reason and what have you, but it shouldn't be our overall reason to get involved in a trade or involved in an investment. You know, we should have the management, all the kind of things that you have to tick the box for, but ultimately a nice story doesn't make a great investment. So just one thing to watch out for, guys. Keep an eye out for that narrative fallacy. Take care. Whatever you're doing, I'll see you next one. Bye-bye.